let's have a look at the income statement. Before we do that, I thought it would be useful to look at the contents page of a set of financial statements. The ones that I will be using is JB Hi-Fi for the 30th of June 2018. You can see that in the heading it's labeled as part of the annual report. The bits that we are interested in are these documents down over here from pages 54 down through to page 56. That's what we'll be focusing on in topic 2. The first one is our statement of profit or loss, and that's also called the income statement, so be comfortable with either of the terminologies being used. And then in a subsequent video, we'll have a look at the balance sheet over here on page 56. In later weeks, we cover the cash flows, and then running across all of them are these notes. And you will notice that the notes run for approximately 40 pages, so about 37 pages that we are looking at there. The notes are supplementary. They give you the dive down detail. So start on these documents here. They're your first place to land. And then if you want further information about any of the items on there, drop down into the note. So as if you would be peeling an onion, that's how we'll tackle these, from the outside first and then progressively drop down. So I would not recommend that you read this from start to finish. Rather drop into your income statement and your balance sheet and then progressively go into the other bits as and when you need them to supplement and help you understand what's on those two documents. Let's move on to the actual income statement, or the statement of profit and loss as it is called by JB Hi-Fi. So we'll now look at page 54. So here we've got JB Hi-Fi's statement of profit or loss. A few things to note before we start. There's always the current year figure, in this case 2018. I've pulled up the full year results for 2018, and there's what we call a comparative, being the previous year's figure. That will assist us as we want to start to analyze movements and see the change from previous years to current years. Notice as well as the word consolidated. That means that it's JB Hi-Fi, it's the holding company, and then all of its subsidiaries. So any organization that it's got a controlling interest in, all of those have been added together to create this group position. Let's start to look at the structure of this document. So here we've got our revenues. Remember, revenues were one of those 5 elements that we spoke about earlier. And then we'll see over here, and all of these here will be what group into the elements of expenses. And the general flow is that we're going to be taking our revenues and progressively subtracting out the expenses to drop down to our final profit figure that we've got over here. We'll work through some of the detail to explore what items are included. So we sometimes refer to this as the top line, our revenue. That's the earnings that have come in from making sales. So in the case of JB Hi-Fi, electronics that they sell at their point of sale will generate for us this amount. So we can see there that they've got 6.8 billion, and because this is all in millions over here, so $6.8 billion of revenue that have come in over the year. This is an important point as well, that we are talking about for a 12-month time frame, and an income statement or profit and loss statement is always over a time period. So you could draw one up for a month, for 6 months, or for a year. So that's our annual sales, and you can see quite a substantial growth from the previous year, where there was the $5.6 billion in revenues. Where we have an organization that's in retail or in manufacturing, in other words, they've got product, we see this line, the cost of sales line. That line refers to the cost price of the goods that have been sold. So the revenue will be selling price, the cost of sales is the cost price. So we could call it, perhaps a better name would have been the cost of the inventory sold. But the way to think about it is the cost price of those goods that were sold during the year. We can see it's a subtraction from our revenue line. This is an expense, and our subtotal that we get to is the gross profit. That gross profit is very useful for organizations to have a sense of, are their selling prices in line or sufficient, how well they're managing their supply chain. So that gives us our first subtotal of the gross profit. And then we subtract the various expenses after that gross profit line. These are called the operating expenses. You'll notice there are only a few lines here, and in fact in the general ledger or in their financial records they would have a lot more detail. So they group up items just to keep this, I guess, onto one page, and to simplify the document that we are looking at. Their major expenses, what we're looking for here is a sense of their operations. So we can see that the sales and marketing is by far and away the largest expense that they have in this organization. Occupancy follows afterwards, so that will be for all the stores that they have. This is where different operating structures give rise to different types of expenses. So if the organization had to move more online, you might find that some of their IT expenses would be increasing and occupancy expenses would be decreasing. So the different models give rise to different expense breakdowns. We can see some of the administration costs there as well. And then this item here, the other expenses of the 77 is probably the next highest. Now, what would be preferable, we don't have it here, but in other organizations they might have a note attached to an item, and then we can go and get the drill down detail on that. We'll get that on the balance sheet when we come to that, and we can explore what it's like to go down into the drill down detail. So from the gross profit, sometimes that's also referred to as a gross margin line. They're interchangeable terms. We then subtract out all the various expenses and we get to this profit before tax figure. That is, we then subtract out the income tax expense to get to the final net profit or the profit for the year that's now attributable to the owners or to the shareholders. Just a point to note on the tax here. That's the income tax. In other words, the corporate tax that the organization must pay. It doesn't relate to GST. It doesn't relate to any employee taxes or taxes that have been taken away from employees or the PAYG withdrawal taxes. So this is the corporate tax that the organization has paid, and you can see around about the 30% line if we look at the net profit figure. So all in all, when we're evaluating JB Hi-Fi, we see our top line revenue growth has substantially increased, and that has flowed through to a bottom line or a profit increase as well for the year. In later topics, we will do percentages, and we can have a look at the actual percentage change that has happened over here. But all in all, the sense that we get is a good profitable position for the organization for the year.